All right, well, thanks everybody that came to this. This is the exam 3 review. You guys saw I sent out an email about an hour ago that had a review sheet with it, and that's what I'm going to run through in this meeting here. So anytime you have any questions, go ahead and stop, interrupt me. So what I'm going to do is I'm going to run through the definitions, give you the book definitions, and I'm going to give you some practical applications to try to help you remember it. And that's what your multiple choice questions are going to be pulled from on the exam, is kind of these terms. And there may be some minor problems from the problems that are multiple choice too, that are really simple to figure out. Okay. But if you saw the sheet, the exam is going to be problem heavy. There's going to be 8 problems on the exam, and they're going to be worth 8 points apiece for 64 points, and then 12 multiple choice questions. And the multiple choice questions will be 3 points apiece for 36 points. Okay, and I will also go back in and maybe adjust some points in it, because some of the problems are only going to have one answer. So if you miss it, you're going to miss 8 points. I mean, that count it all off. I don't know exactly how I'm going to work this out yet. It's a very unique situation when I cannot see your work and your thought process behind it. Okay, but the problems that are going to be on the exam, I'm going to give you a practice exam. I've not made either yet, but it'll be out this afternoon. The practice exam will be open until Sunday, and the regular exam will be open from Friday until Monday. The problems that are on the practice exam will just be the exact same problems on the test with different numbers put in. So if you go through and look at the practice exam, it's going to tell you how to do them, how to work through them, study off that, and then when you get to the exam, you'll know how the problems are going to be. And finally, about the exam, you'll only have one attempt, so make sure you're at a secure internet connection when you go to start it. Okay, if something does mess up, let me know as soon as possible that you started it. Okay, it'll show me how much time you got to spend on it and stuff like that, and I can go into the Connect software and make some adjustments. And there will be a 90-minute time limit set on the exam. Okay, so are there any questions about the exam format before I start going through the content? All right, so this unit we did chapters 14, 11, and 12. 14, none of that is going to be on the exam. Okay, that was all covered in the project. Okay. For chapter 11 was differential analysis. So some of the terms for this: first, differential costs and revenues. Those is whenever you're comparing two alternatives, it is just the difference. Okay, what is the different revenues? What is the different costs? Pretty self-explanatory. But what incremental cost is the amount by which costs increase by choosing one decision over another. Avoidable costs is kind of what the word says, costs that you could avoid by choosing one alternative or another. Okay, joint costs and products is not anything we really talked about in the video so far, because I don't have any problems based on these. But joint costs and products is whenever you're in a process costing system and you're making a product that it gets to a certain point where you can either sell it right now or you can use it to keep producing something further. If you think about maybe in the food industry, somebody brings in corn and stuff, they turn it into flour. So on that point, it's a joint product to the flour, all the corn and everything that goes into making the flour. And from that point, they can sell the flour or they can process further and make bread. Okay? That is called the split off point, where you can make one product or another. Okay? If you go on in accounting and you move on to some advanced classes, you're going to learn how to do the costing for joint cost and how to cost for the split off point. And we're not doing that, but I just want to make sure you're aware of what the terms mean. Okay, opportunity cost is the next one. Remember, that's one that may or may not be in a dollar amount. It is what you're giving up by choosing one opportunity over the other. And a sunk cost is something that has been spent in the past and is always, always, always irrelevant to the decision at hand. One term that I did not put up there that I was looking at after I sent everything out, it's down in the problems. You can write the term constraint up there. You need to know what a constraint is. So whenever you're doing production, a constraint is something that hinders production, where you cannot make as much as you want to do. Maybe it is machine hours, maybe it is the amount of direct materials available, but it's something that stops you from producing as much as demand requires you to produce. Okay, so those are kind of the terms I'll pull from for the multiple choice questions. So there's only going to be 12, so you won't see all of these, but you'll see a good majority of them. The problems for these are the problems that you had to do in the homework assignments that I went through on the exam. So drop or keep a segment. You have 3 different business segments within your company. Okay, one of them is losing money. We are going to see if we drop that segment, whether it's going to make an overall profit for the company or whether it's going to decline the profit for the company. Remember, we're only looking at the differential costs there. Okay, use the problem if you need to. Also, next we have make or buy decisions. That is where you are a manufacturing company and you're going to decide if you should buy some of your parts from an outside manufacturer or yourself, cost effective. Special order decisions. Okay, whenever you're producing something and maybe somebody comes to you with a one-time offer at a little bit lower price than what you normally sell it for, should you take that or not? And then finally, production with a constraint. That is when you're going to find the contribution margin per unit of each thing produced, divide it by the constraint, whether it be minutes on the machine or the direct materials available, to find out which one produces the higher contribution margin with the constraint involved, and then produce as much of that one as you can, and so on down the line. Okay, so as I said in my email, I'm not going to go through any of these questions because you're going to have mirror images on the practice exam, unless somebody that's in here right now requests it. Is there any problem that somebody would like to see worked through and explained a little bit more in detail? No? All right, so chapter 12 is all about capital budgeting. So it's a little bit different than chapter 11. Chapter 11, we were looking at differential analysis, making decisions for inside the business, operating decisions, okay? Capital budgeting is about making long-term decisions for the business, okay? Whether we should buy this piece of equipment, whether we should expand, stuff that is going to take large expenditures, okay? So some of the terms that came from chapter 12, the first one is cost of capital or the discount rate. Those are kind of interchangeable. If you watch the other videos, the cost of capital is basically what it costs the company to acquire money. It's going to be the weighted average cost of capital moving forward in your finance classes. It's how much they expect to pay to investors and how much they expect to pay to creditors. And then you kind of average out that percent and everything. It is also known as the discount rate. It is what we use for net present value to discount everything. After that, there is the internal rate of return. The internal rate of return, the definition is, it is the rate when net present value will equal 0. Okay? To calculate the internal rate of return, you take the original amount invested, divide it by your annual cash flows to get a factor number. And from that factor number, you have to go to your charts then and just cross-section it to find out what percent it falls on. Next is payback period, which is also a problem. Payback period is just how many years or periods it takes to pay back the initial investment. Time value of money. Time value of money is the hardest concept, I believe, in this class, and I'm sorry I had to teach it remotely. But what it means is that $1 today is worth more than $1 in the future. Okay, so if somebody's going to pay you in the future, they are going to have to pay you a little bit more. That way, if you get money in the future and you want to put it in today's terms, you have to bring it back and it's going to be less. Okay, so if somebody's paying $1,000 a year from now, it's probably only worth about $980 today, because if you had that money today, you can invest it and get a rate of return. Finally is working capital. Working capital is known as current assets minus current liabilities. And it is basically the amount of assets a company has to work with to have a project. Okay, how we're going to define it in this class is used in some of the net present value, because some companies have to put working capital into a project when it starts. It means they have to put so much cash into it as an inflow. The problems from this are the payback method problem, which if you guys have worked through this already, those are very simple problems. You just find the initial investment, look at your cash flows each year, and just look back and find out exactly how many years it is going to take to pay back that investment. Net present value. There is a single net present value and a multiple net present value problem. From the videos, net present value is the present value of the inflows minus the present value of the outflow. Finding present value is explained in detail in the videos too. So if you haven't watched, go back and watch them because it is an intricate process. If it is a single product, you accept the project when your net present value is 0 or above. If you have a negative net present value, it is a project you do not want to do. When you have multiple projects, you are just comparing them against each other, and you want to accept whichever one has the highest net present value as long as it is above 0. And finally, the internal rate of return, a problem on that, and I've already told you how to calculate that. That is your initial investment divided by your annual cash flows. Okay. Once you get that number, that is your factor number that you have to go and plug into the chart. Net present value, one thing I want to emphasize again, because I've had a couple people email me on this, I just thought about this. When you're going to use the charts, you have two different kinds of charts. There is a present value of one chart and a present value of an annuity chart. It's important to distinguish which is which. The present value of one chart you use to discount a payment that only happens one time. Okay, so if you have salvage value, that is a one-time cash flow. So that will use the present value of one. If you have the return of working capital, that is a one-time event. Okay. But if you have something that happens on a yearly basis and it happens at the same amount, that is known as an annuity. Okay. Anytime you have operating income is going to increase by this much per year, that is an every year thing. When you're discounting that amount, you're going to want to use the present value of an annuity table. Okay. So, does anybody want to work through any of these problems on chapter 12? If not, guys, that's all I have for you. I just wanted to run through the definitions with you, kind of show you what was going to be on the exam if you wanted to see anything. Like I said, if you want to take the time to do the practice exam, you're going to have mirror images of the problem, and it's going to show you how to get the problem done. And then you have an hour and a half on the exam. So I believe everybody's going to do excellent on this.
Hello? Can you hear me?
Yeah, Mike.
Okay. Would it be possible to hold another meeting after we get the practice exam? Because right now it's kind of hard to know what I have issues with if I can't see it in front of me.
If you want to reach out to me, I can hold a personal one with you, and then we can invite anybody else that wants to join at whatever time's convenient for you, Mike. Okay. I don't want to hold one for the whole class because I think there's only 7 people here now. I haven't had very much luck with people showing up for these, but I will definitely do a one-on-one with you if you want to.
All right, cool.
I've done that with Ray, and I've done that with a couple other people.
Yeah, that really helps too. It really does. So I'd be down for one of those. All right.
If nobody else has any questions, I'm just going to sign off then. This has been recorded, so I'm going to post it onto the Moodle site and send it out in an email as soon as it gets all processed and downloaded to YouTube.
Hey, Chad.
Yes?
When would you guys be doing that meeting?
I have no idea. And because it's just, I can do it at your convenience. I can do more than one too. If somebody wants one time and it doesn't work for them, okay, I'm very flexible with this.
So will you send out an email if like somebody
requests,
you are
I'll
having
send out the email on the time that they wanted to do the meeting, okay?
Okay.
And then I'll say if anybody
Okay.
wants to join, feel free to join us at this time. If that time doesn't work for you and you want to do a different time, just email me and say that doesn't work. Can we do one this time? And then I'll send out another one saying, okay, another one's been requested at this time. You can join either one.
Okay.
And just a little update on me while you guys are here. My back has been in excruciating pain. I finally got into the doctor yesterday. I am having back surgery in a week or two. But with the way the procedures are now, it's a 45-minute outpatient surgery. So he said I will be good as new in a week or two. And I'm so excited because this is horrible.
Glad to hear it.
All right, ladies and gentlemen, thank you. If there's nothing else, speak now or I'm going to stop this and sign off. All right. Have a good day.
You too.